Breaking news in the world of finance: compound interest is making headlines as the secret to creating wealth. In an exclusive revelation, top financial experts are sharing their insights on how to harness the power of compound interest to secure your financial future. With over $15 trillion in ETFs under management, the finance industry is buzzing with excitement about the potential of compound interest. As of 2022, the average American has approximately $40,000 in savings, but with compound interest, that number could skyrocket. The critical question is, how can you get started? Welcome to our channel, where we bring you the latest news and trends in finance, investment, and technology. Our mission is to provide you with the best insights and advice to help you make informed decisions about your financial future. With a focus on high-growth industries like crypto and AI, we're committed to helping you stay ahead of the curve. Don't forget to subscribe to our channel for the latest updates and exclusive content. By joining our community, you'll gain access to expert analysis and tips on how to navigate the complex world of finance. To understand the concept of compound interest, let's take a step back in time. The idea of earning interest on interest dates back to ancient civilizations, where merchants and traders would lend money to each other at interest rates of around 10 to 20%. Fast forward to the present day, and we see that compound interest has become a critical component of modern finance. With the rise of digital banking and online investment platforms, it's never been easier to start earning compound interest on your savings. As of 2020, the average interest rate on a high-yield savings account was around 2%, but with compound interest, that rate can increase exponentially over time. Now, let's dive into the world of compound interest and explore how it works. In simple terms, compound interest is the process of earning interest on both the principal amount and any accrued interest over time. This means that your savings can grow at an exponential rate, with some investments offering returns of up to 10 to 15% per annum. But that's not all. With the power of compounding, you can also reduce your risk and increase your potential for long-term growth. For example, a $10,000 investment with a 7% annual return could grow to over $20,000 in just 10 years, thanks to the magic of compound interest. But what about the experts? What do they have to say about compound interest? We spoke to a leading financial advisor, who revealed that compound interest is the key to creating wealth over the long term. It's not just about earning a high interest rate, they said. It's about consistent, sustained growth over time. With the right investment strategy and a bit of patience, anyone can harness the power of compound interest to achieve their financial goals. For instance, a study by Fidelity found that investors who started saving at age 25 and contributed just $500 per month could have over $1 million by age 65, thanks to the power of compound interest. Now here's where it gets interesting. Compound interest can also be used to pay off debt. By using the same principles of compounding, you can pay off high-interest loans and credit cards more quickly, saving thousands of dollars in interest payments over time. This is especially important in today's economy, where the average American has over $38,000 in personal debt. By using compound interest to your advantage, you can break free from the cycle of debt and start building wealth. For example, a borrower who owes $10,000 on a credit card with an 18% interest rate could save over $2,000 in interest payments by paying off the balance in just 2 years, rather than 5. But that's not all. Compound interest can also be used to invest in the stock market. With the rise of online trading platforms and robo-advisors, it's never been easier to get started with investing. By using a combination of low-cost index funds and compound interest, you can create a diversified portfolio that generates consistent returns over the long term. For instance, a $10,000 investment in the S&P 500 index could grow to over $50,000 in just 20 years, thanks to the power of compound interest and the historical performance of the stock market. Now, what I'm about to tell you next is something most people completely miss: the power of compound interest in retirement accounts. By using tax-advantaged accounts like 401(k), 401(k)s and IRAs, you can supercharge your retirement savings and create a nest egg that will last a lifetime. With the average American living longer than ever before, it's critical to plan for retirement and make the most of compound interest. For example, a 30-year-old who contributes just $500 per month to a 401(k) could have over $1 million by age 65, thanks to the power of compound interest and the benefits of tax-deferred growth. Let's take a closer look at how compound interest works in practice. Imagine you have a savings account with a 5% annual interest rate, compounded monthly. Over the course of a year, you would earn approximately 5.12% in interest, thanks to the power of compounding. But what if you were to invest that same amount in a high-yield savings account with a 7% annual interest rate? You could earn over 7.25% in interest, thanks to the magic of compound interest. For instance, a $10,000 investment in a high-yield savings account could grow to over $17,000 in just 10 years, thanks to the power of compound interest and the benefits of high-yield savings. But how does compound interest compare to other investment strategies? Let's take a look at the numbers. According to a study by Vanguard, a $10,000 investment in a high-yield savings account could grow to over $17,000 in just 10 years, thanks to the power of compound interest. In contrast, a $10,000 investment in the stock market could grow to over $20,000 in the same time period, thanks to the potential for higher returns. However, the stock market also comes with higher risks, making compound interest a more stable and secure option for many investors. For example, a study by Fidelity found that investors who invested in a diversified portfolio of stocks and bonds could earn average annual returns of around 7 to 8%, compared to just 2 to 3% for a high-yield savings account. Now, let's talk about the best ways to get started with compound interest. According to experts, the key is to start early and be consistent. By setting up a regular savings plan and taking advantage of tax-advantaged accounts, you can create a snowball effect that will grow your wealth over time. For instance, a 25-year-old who starts saving just $500 per month could have over $1 million by age 65, thanks to the power of compound interest and the benefits of consistent savings. Additionally, consider using online tools and apps, such as Mint or You Need a Budget, to track your expenses and stay on top of your finances. But what about the risks? As with any investment strategy, there are potential downsides to compound interest. For example, if you're not careful, you could end up paying high fees or interest rates that eat into your returns. However, by doing your research and choosing a reputable financial institution, you can minimize these risks and maximize your potential for growth. For instance, consider working with a financial advisor or using a robo-advisor like Betterment or Wealthfront to help you navigate the world of investing and make informed decisions about your finances. So, what does this mean for you? In practical terms, compound interest can help you achieve your financial goals and create a secure future. By starting early, being consistent, and taking advantage of tax-advantaged accounts, you can harness the power of compound interest to build wealth over the long term. For example, consider using the 50/30/20 rule to allocate your income towards savings, expenses, and debt repayment. By doing so, you can create a balanced financial plan that sets you up for success and helps you achieve your goals. But don't just take our word for it. According to a study by the Federal Reserve, the average American who starts saving at age 25 can retire with over $1 million by age 65, thanks to the power of compound interest. That's a critical difference that can make all the difference in your retirement plans. By starting early and being consistent, you can create a secure financial future and enjoy the freedom and flexibility that comes with it. For instance, consider using a retirement calculator to determine how much you need to save each month to reach your retirement goals. As we look to the future, it's clear that compound interest will continue to play a critical role in shaping the world of finance. With the rise of digital banking and online investment platforms, it's never been easier to get started with compound interest and start building wealth. According to experts, the key is to stay informed, stay disciplined, and stay patient. By doing so, you can harness the power of compound interest to achieve your financial goals and create a secure future. For example, consider staying up to date with the latest news and trends in finance by following reputable sources like the Wall Street Journal or Forbes. In conclusion, compound interest is a powerful tool that can help you create wealth and achieve your financial goals. By starting early, being consistent, and taking advantage of tax-advantaged accounts, you can harness the power of compound interest to build a secure financial future. Don't forget to like and subscribe to our channel for more exclusive insights and expert advice on finance, investment, and wealth creation. Thanks for watching, and we'll see you in the next video. Consider checking out our playlist on investing in the stock market for more information on how to get started.